So I'm worried, you should be too. And the reason being is Federal Chairman Powell came out on Friday and said he plans to inflict pain on U.S. households, especially those that are out there looking to buy a house in 2022 and 2023. No, that's not what he said. So today's video, we're going to put that into context. And basically, here's the question for the week. What's the Federal Reserve's plans here? What's their objective? Okay, because if they are under a microscope right now, no matter what they say or do, the markets are reacting. The stock market, the housing market, interest rates, and everything. So my goal is to make sure you're educated and informed everything real estate, especially the financing piece of this puzzle. So today and tomorrow and Wednesday, we're going to talk about this. What the Federal Reserve's objectives are, what the remedy is, how they're going to fix this, and what is the conclusion? What are they looking as the end result to all this? So that's our whole goal for this week. First, let's explain what happened last Friday. So last Friday, Federal Chairman Powell spoke in front of a group of bankers from all over the world in Jackson Hole and came out and basically said he plans to do, and that's the question behind all this. Depending on what you watch and what you see on the internet, it varies all over the place because is it actual factual data or is it just clickbait? But what I want to show you guys is the result of after what he said is what happened is, and you can see that the Dow Jones plummeted more than 1,000 points on Friday right after Federal Chairman Powell spoke. But what actually did he say? To find out that, let's go to another website. Okay, and this website has it a little more in context, but it's still a little clickbaity. Jerome Powell says the Fed is ready to bring some pain to households and businesses. These are the unfortunate costs of reducing inflation. But again, what did he actually say? Is it as bad as basically a lot of this stuff says? So to put this into context, let's get the quote that he actually said. Reducing inflation is likely to require a sustainable period of below trend growth. So they're trying to kill growth. He said, while higher interest rates, slower growth, and a softer labor market conditions will bring down inflation, they will also bring some pain to households and businesses. That's exactly what he said. So the next piece of this puzzle is, why did he say what he said? To kill inflation, basically to put a halt on the prices of basically everything going out of whack. So to look at this, how bad is the inflation numbers right now? We have to go to this chart right here. So this is the CPI, the Consumer Price Index, on how much prices affect the consumer is the best way to say that. So here's where the trend has been for the last 10 years. Look at this. And like the Sesame Street, as we go across here, what doesn't fit? Where does it fall off the handles? Right here. You can see inflation back in 2021 and 2022. It is spiking out of control. That's the goal of the Fed, is to put this put this back into control, especially in the housing market. Look where the housing market is. So basically, if we look at Q2 of 2020, house values were at $322,000, the average home price. So 2 years later, where are we? 440,000. Okay, so how is the Federal Reserve going to curtail inflation, especially in the housing market? Well, that's what we're going to talk about next. So the Federal Reserve, when they make actions, their actions have a ripple effect, kind of like throwing a rock into a pond. You can see the initial bloop, and then you can see the ripple effects. So let me put this in context for you. The Federal Reserve, their plan is to keep increasing interest rates as high as they can for as long as they can to basically squish the economy, okay? But what do they really control? Well, they control one piece or one facet of the economy when it comes to interest rates, and that's the federal funds rate. The federal funds rate is simply this. When one bank needs money, what they do is they go to another bank and they get that money lent to them, okay? The interest rate that they pay on that is called the federal funds rate. All right. But what happens here is when the Federal Reserve changes the federal funds rate, it has almost an immediate effect on short-term lending. So that's car loans, student loans, personal loans, credit cards, and so forth. But there's two areas that the Federal Reserve doesn't really control or directly control, but they have a manipulative way to control this, and I'll explain that in a second. They don't control Treasury yields and they don't control mortgage rates, but they have an instrument called quantitative easing, and quantitative tightening that can play that role for them. So let me explain it this way. I go over every morning what the MBS market's doing. And this is a bond that trades on Wall Street that is the biggest component of your mortgage rate. Okay. So how did mortgage rates get so low for so long? Well, the Federal Reserve stepped in and they quantitative eased. Okay. Basically what they did is they went into the market and they were buying up mortgage-backed securities in the tune of $40 billion a month. Okay. So we know on everything works as kind of economics 101, supply demand. So if they come in and buy $40 billion worth of mortgage-backed securities a month, that's going to drive up the demand, okay, and drive up the prices. As the prices of mortgage-backed securities go up, the rate comes down, okay? So that's quantitative easing, and that's what they've done for the last 2, 3, 4 years. Well, now, not only are they going to withdraw from quantitative easing, they're going to quantitative tightening mode. What is that? Well, they stop buying, okay? So they stop buying mortgage-backed securities, thus is driving down the demand. Okay, but now they plan on selling up to $30 billion a month, selling $30 billion a month in mortgage-backed securities. So they're adding to the supply. So now you have less demand, higher supply. What's that going to do? Well, it's going to plummet the prices until we find an investor for those bonds. Okay, when the prices go down, rates go up. So do you understand how the Federal Reserve kind of uses quantitative easing and quantitative tightenings to kind of manipulate the markets? So tomorrow we're going to talk about what their remedy is to fix all this. And then on Wednesday, I'm going to show you how they plan on basically checking their results to see what happens. And that's the scary part of this equation. So, but as you see, why are you here? Well, the rate update. So let's get to it. We've already went over mortgage-backed securities. Right now, what happened is there's the ripple effect from Friday's market correction from the Federal Reserve, because Federal Chairman Powell came in and said he plans on inflicting pain in the markets, and the repercussions continue to this day. So that's what's going on with the MBS market right now. So why are you here? Where are mortgage rates? Well, we're going to see probably mortgage rates go up at least 1/8 today, but this is where we ended on Friday. So as of Friday, the mortgage rates didn't spike initially like I thought they were going to, but they're going to start to increase now because of 2 reasons. One, we see the Federal Chairman Powell came in and says they plan on quantitative tighten. Okay, so that's one piece of the puzzle. Plus, they also plan on selling mortgage-backed securities into the open market, and it starts in September. So that's what's going to happen with mortgage rates. We're going to see mortgage rates trickle up probably in the tune of about 1/4 to 0.5% from here, just because of quantitative tightening. But here's where we are today. This is a news publication by Mortgage News Daily. They published the 6 most used mortgage products throughout the whole country. Here's where they are. So this is the analogy behind this is Mortgage News Daily sends out the survey to mortgage lenders every day, and they say if you had a client that was looking to buy a $500,000 house, putting 20% down, it's a single family home and going to be their primary residency, what would be the rate? Okay, and this is the results. So here's where rates are. These are actually where they were on Friday. Mortgage News Daily has not yet posted an update for today. So we're going to probably see rates uptick at least about 10 basis points today if the market trends as it is right now. So my name is Dan Frio. I do the market update every day to make sure you're informed everything real estate, especially when it comes to the financing piece of the puzzle. So if you enjoy my videos, you enjoy my content, all I ask you to do is please visit us to find out more on how we might be able to help you. How you do that is go to therateupdate.com. Here's all the information available for you. You can give us a call, set up a meeting, and we even have a chat button available for those that are online. Boop, bloop, it just popped up. If you're online and see a chat bot and you want to have ask somebody a quick question, it is one of us live on there every day. So thanks so much for watching. If you would, please don't forget to give us a thumbs up, subscribe down below, and hit the bell every time we post a video. You get an alert. All right, guys, I'll see you tomorrow. Bye-bye.